This tutorial is designed to help you use XERO for your main accounting assignment. You would have received that looks something like this with a whole lot of transactions and opening balances and inventories. What I'm hoping to do here is to show you how to use XERO for this accounting assignment. So first up, how to add an extra organisation. Now when you log in, you would be straight away be taken to where you have to add an organisation. You press on that, and it is an online thing, so sometimes you'll have to be patient. You have to fill out your exercise name, so on Andrea's Furniture, and so on. I'm not going to do it all here. It's important that you say what the organisation does. I usually put accounting education down here, but you can put down anything really. There it is, down here somewhere, or just straight education, doesn't really matter. It's really immaterial, but you need to start the trial and away you go. So when it comes up, it asks you to do a whole lot of other things, and what I want you to focus on now is to add some accounts. So how to create new accounts in the chart of accounts. Well, what you need to do is to go up here to settings, chart of accounts, and you'll see the accounts that are currently in this organisation already set up for you. It's obviously all zeros. If you want to add an account, go there. Firstly, what we must do is add a bank account, which is really important. In your exercise, there is a amount for $55,000 that you need to set up your account for. It doesn't really matter what bank you take. I call it cash at bank. Make sure you spell it right. Type of account doesn't really matter, but everyday account. The BSB, you can put in some fictitious details. You can see here what I'm doing. The numbers doesn't really matter what they are. I'm just putting in random in there, and continue, and my bank account is set up. I'm going to skip this process because I don't have a real life bank account, and you can see from here that I've got a bank account, but I put nothing in it yet. The next thing I've got to talk to you about is conversion balances, which is setting up the opening balances from your assignment. You can see here that there's a number of balances here, some of which I've put in, but I'm going to show you how to do that using this thing called conversion balances. So under settings, you go to general settings. You notice here there's a thing called conversion balances. I've already put a few in. You can see for cash at bank and so on and so forth. I haven't put in the delivery van accumulated depreciation yet. When I add a new line, I know that I want to 741. I know that it isn't there yet, so I've got to add up the new accounts. I'm going to show you that as well while I'm there. So it is a fixed asset. All the physical assets are called that. 741 is the accumulated depreciation that I'm going to use. There you are, accumulated depreciation. I don't need the expenses on that one, so it can be BAS excluded because it's just accumulated depreciation. I'm going to save that. The amount that I need to include, I need to refer to it, is 10,733, so I'm going to put that in. Oops. Right. So that's the other item that I need to put in. When I put that in, the adjustment needs to be put into the capital. Right. So I've got to put in a new line. I go down the bottom here and I show capital, and the amount that I've got to put in there, because it's a minus amount, is 10,733. And what that does, it adjusts the owner share capital. Save that. You can see everything's zero, and and now I'm ready to go when the adjustments are ready to go. So the next thing I've got to do is to put in inventory items. Now XERO is really good and it tracks all the individual items, so it automatically calculates cost of goods sold when you sell them and so on and so forth, but we have to set that up using XERO. So what we do in XERO is to go to the accounts and inventory, and you can see I've already set up one inventory item. Let me show you quickly how to set up another one. If you go back to the assignment, you'll notice that we've got to set up lounge suite for $350. So I go to new item. I'm going to call this lounge. The official name is lounge suite. Doesn't really matter. I'm going to track this item, and it gets tracked to the inventory account. The unit price when I buy it is $350. It's going to go to my cost of goods sold account, and when I sell it, funnily enough, it goes to the sales account. So they're all the things that you need to do, and it automatically tracks all these items for you. So when I save it, you can see I've got garden settings and lounge suite, and you must repeat this process for the other two items that I haven't got yet. Now I'm ready to start my transactions. Now I'm going to show you how to do the first transaction, namely the credit purchase. We need to go to the account section, purchase new bill, and the transaction I'm going to show you is that we purchased 19 wardrobes, next text exclusive, and I'll show you to do that. So within here you go to accounts, purchases, we want to go to new bill. It's a new invoice that we got from bedding wholesalers. You put that up there. There it is. Usually have to put into a date. Usually, it's usually 30 days or so, but just for the hell of this assignment, that's okay. We're buying wardrobes. We bought 19 of them, so I'll put that in. The important thing here is that it's the price is not inclusive, it's exclusive, because we're dealing with the cost price to us. So we approve that one. So that's when we buy it. The next one I'm going to show you, if we then return some items. So we go to the same item, and this time we've got to generate a credit note, and I'm assuming that we are returning 5 of those. It's wardrobes. You must select that 5 that we return. That's the assumption I'm making. Again, it's tax exclusive. And once you get to this place, you've got to allocate the credit to the actual initial invoice that it related to, and it's this invoice that we generated before. I'm going to allocate all of that against that initial invoice. So that means that all that remaining credit is done. So when we go to have a look at our amounts outstanding, you see there's 2 items there. One of them which that relates to here, so the net amount there. Mate, let's make an assumption that bedding wholesalers are going to pay, say, $10,000 or say $5,000 straight away. You do that, you add the payment, but importantly, you must also then allocate what account we're going to pay from. That's cash at bank. So we add the payment here, and you'll notice in a moment that we still going to owe some money, because initially we bought 19, we bought 5 back. We paid $5,000, and we still owe $5,472. So they're all the items that we do from our purchase module. Now I'm going to show you how to do a credit sale. You've got to go to Accounts, Sales, New Invoice. The transaction I'm going to show you is that adept who is a customer of ours, purchased 30 gardening settings for $275 each. Here's the invoice, and it's tax inclusive of that price. So when we go here, we go to accounts, sales, new invoice, new invoice, there it is, a bit slow. It's to adapt. The person's already there. No, it's not. Make it payable at the end of the month. If there's a different number, you can put it in there. Here we are. The item that we're selling are garden settings. We have sold 30 at $275. It's got to go to the sales account, and there is the amount there, and it's tax inclusive. So what that means is that the total amount, that's the sales price there. So I've made sales of $8,250 less the tax that we owe. So once we approve that, the next assumption I'm going to make is that 2 have been returned. Okay, so it's to adept. The item that we have to allocate here, garden settings, it's for 2. It's for $275. The amount that we've got to calculate here is a sales returns. So I've got to add a new account, which I haven't got yet. So I've got to find the right sort of account. Sales account. Choose a number. It's available. Sales returns. GST on income. It's okay. So that's tax inclusive of that amount. We'll go to approve. It wants us to allocate all of that to the previous invoice that was generated for the sale. I've got to do that, and it's done. Now I'm going to show you what happens when we have a payment. So I'm going to assume that we received a payment on the sales that we've just made. Obviously that would occur on another date, but I'm going to use the same one. So this one here, so $7,700. You can see that initially it was 8.2. We've got a credit note applied. I'm assuming that all of that was paid. We paid straight away. Sometimes it's a different amount. Obviously, then you have to put a different amount in. Well, let's just do that. Let's just say only $5,000 was applied. It was paid to our cash at bank, and add a payment, and that's it. I'm now going to show you how cash is paid through the bank account, manage accounts, spending money. The assumptions here that I'm making on the 7th here, 8th, we paid some accounting fees, and I'm going to show you one without GST as well. So let's just make a start. So under accounts, bank accounts, it's a little bit different to the other 2 modules that we've been working on. You go to manage accounts, it's the only difference here, and we're going to spend money. You can see that it keeps track of the amount that is in the bank at all times. We're going to pay to the accountants. We need another item here. Accounting. So importantly, the amount that the accountant I'm going to use here is this one here, consulting and accounting. That's fine. I'll purchase that item. GST and expensive, that's an important thing. The unit price in this instance was 406 according to my example. And you can see that's a tax inclusive. So there's a little bit of tax there. So everything's okay. I say yes. I'm going to show you one without tax. So let's just do that one. So the amount, the type of transaction I'm going to have here is we paid wages. So we've got to set up another item. So the item that I've got to put in there is wages. Purchase this item. Importantly, the purchase account is what I've got to put in here. Wages and salaries. It is actually excluded. Wages and salaries doesn't have any tax, so you put BAS, excluded, and the tax won't come up at all. The amount that I'm going to take here is $7.94. So you can see here there's no tax on that. That's simply by having either BAS excluded, or later on if it's not, doesn't come up, you can say no tax. Okay, there's two ways of doing that. So I save that. That means I've done two items of spending money. Now I'm going to show you how to deal with when we receive cash. So this instance I'm going to show you this particular transaction. We must go to accounts, bank accounts, manage accounts, receive money. So let's go and do that. So under accounts, bank accounts, manage accounts, receive money. So we receive from sale of van, it's cash. Item I don't actually have to put in there. I put in here because this doesn't come, it doesn't recur, so that it's no point in putting an item that comes up all the time. Sale of van, it's just something that happens every now and then. Obviously, just sold one. It was for $9,900. It was tax inclusive, so there is some tax there. The account that I've got to credit is the delivery van, of course, and we sold it and got $900 worth of tax to pay on that. So that's the van that we sold. So that's the easy bit. So that's gone to our bank account. But now what I've got to do, I've got to account for the profit or sale on the actual transaction, and that gets a bit harder. So therefore I've got to make that entry in my general journal. So now I'm going to show you that. So in order for that to happen, I've got to go to my advisor section, manual journals, new journals, and then I'll come back and show you the calculation to the manual calculation for the loss, so we know what to do in terms of accessing the relevant XERO accounts. So when we go back to XERO, you'll note here that I haven't got a advisor sitting up here, advisor tab. So I've got to go to setting and general settings, and I've got to go to users. I haven't set myself up to be an advisor, so when I click on my name here, I'm a subscriber, but I haven't yet allocated myself as an advisor, so that's what I do down there. I save that, and as soon as that happens, you'll notice that up here now the advisor appears, and that's what I want, because if you're not an advisor, you cannot make a manual journal, and that's what I want to do. A manual journal meaning a general journal entry. So then I press on the general journal there. Okay, loss on disposal of delivery van. But we need to know what to put in there first. So I'm going to go back in a minute and show you. So let's put that in there. I've got to know what accounts to debit and credit. Alright. So in our example, you'll notice here that the delivery van cost us 20,000, and there was an accumulated depreciation amount there of 10,733. That information I could have got from by looking at settings and chart of accounts and found that information, but I'm doing the shortcut here for the moment. So that means that we think the value of the van is 9,267, which is that minus that. We received $9,900 cash, which you've just put into the cash account, but you've got to remember that 900 is GST, therefore we only received 9,000 in the value of that we keep. So therefore, if we think it's worth 9,267 and we only received 9,000, there's an item here of $267 of loss on this account. Now, the other thing that we've got to consider in order to make this entry, that we've got to get rid of the two amounts here, the delivery van and the depreciation as well, and the remaining amount is going to be 267. Let me show you how that works. Alright, so the account here, the first amount that I've got to do is to get the accumulated depreciation account, because all of that has to be debited, and the reason why I'm saying debited because it's sitting there in as a credit, so I've got to get rid of that. And the other account that I've got is the account for the actual delivery van itself. And what it wants to do is to credit that whole amount. You can see it automatically, but that's not the case, because the amount that's actually in there is $20,000 less 9,000. 20,000 was how much it cost in the first place, less than 9,000 that we got for it, net of the tax. Therefore 11,000 is actually sitting in that account still, in order to zero that off. So you'll see that in another item here must be the 267. You can see that this account is out by 267, and that's the amount that I calculated to be the loss on disposal. Now we haven't got an account for that, and I'm going to put that here at 444, or 444. That's okay. I know, I'll put it down here as 446. That's my new account. So it is an expense account. I've chosen my number. I'm going to name it loss on disposal. It is not taxed. Save that. I didn't put the right amount. I beg your pardon, how silly. There we are. So now I'm right. So 267's put that in there. Both debits and credits are the same. I'm going to post that. So it's the same. This is more complicated general journal entry, but if I wanted to do any other journal entry, so for example balance day adjustment, I would go to a new journal and do it exactly the same way. For this entry I'm going to show you how to make an inventory adjustment both in terms of a stock loss or gain, or when the owner takes away an item for themselves. So I've got to go to Accounts, Inventory, select the item, Options and New Adjustment. I'm just going to show you to do that. So Accounts, Inventory. It's one garden setting that is missing in this particular example. I've got to click on the inventory item. I've got to go Options and New Adjustment. If it's for an increased gain, if I can increase quantity, but in this instance I've lost one. So you can see how that adjusts straight away. The count. Now, you know that inventory adjustment must be with cost of goods sold account. So it's under expenses, but I'm going to have it as a new account as 311. So it's an expense, 311. The name is inventory adjustment. There we are. There's no tax on that, so there you are. I do it that way. I've got to have a reason for adjustment. Just type in anything. There we are. So I've got that sorted. With my next example, if I have drawings of inventories, this is going to be a little bit different. In that I've got to worry about my tax in this instance. So again, you go to the same one, inventory. It's the same. Let's assume that I've lost another garden setting, or I've taken a garden setting away. I'll press on that. I go Options, Adjustment. I've lost one, but the count it goes to in this instance is drawings, and I've already set that one up. There it is there. The way that I set up drawings, it does account for tax. I've given this to a friend. Review adjustment. There it is there. And it looks like in this instance that I haven't adjusted for the tax, and I've got to do that. So you can see that the garden settings now down to 22. Now I'm going to show you how to get rid of a bad debt that's occurred. And so I need to go to Accounts, Sales, Awaiting Payment, Invoice Options, and add Credit Note. And then through the Credit Note I've got to add the bad debts expense. So the example I'm going to use is that a letter informing that pamphlet had been declared bankrupt and none of it would be repaid. So how do we do that? So I've got to find the actual invoice. So I go to Accounts, Sales. I can go that way, and there's the awaiting payment. Another way I could have done that is to go to Reports, Aged Receivables. There they'll have all the people that have got outstanding debts. There's pamphlet there. That 1281, I've got to find the invoice. There it is. And from that, I've got to create a credit note which wipes out all of this 1281. So when I do that, I'll put those dates. The important thing here is that instead of sales, I've got to put bad debt. I'm not sure whether that is there yet. Okay, I'll put that in, and the whole there is some bad debts that I need to be able to claim back, because that was initially what was charged, and there you have it. So you just need to make sure that you've got the bad debts account and improve it, and that's all you need to do for a bad debt. So when you then go to the accounts receivable there, that account shouldn't be there anymore. As you can see, it's only that one that's still remaining. This is the last section I wanted to show you. The reports menu is very important, and especially in terms of the journal report, so you can track the transactions as you make them. You have a look at the reports menu, and I'll take you to the all reports here. The first one I wanted to show you is down a bit under the accounting one, called the journal report. It's really useful to check your progress, and you would already have a manual set of transactions, and you can obviously check against here to see whether the debits and credits are right, to see whether you've input this information correctly into XERO. So if you wanted to check a certain account, for example, let's just look at the cash at bank account here. You click on there, and then you would go here to this number, so it tells you what has occurred for this month. You click on the number, then it gives you the individual amounts, and that means that, for example, if you want to check something and correct it, or indeed delete it if you made a mistake, you then need to go on to the original transaction, and once that comes up, you can then delete it or change it, whatever the case may be. So in this particular instance, if I wanted to get rid of it, then I go to options, remove, redo. Alright. And this is a good thing to do as you go along, to check the progress of all the individual transactions you put in. Once you get to the end of all of your transactions, one thing that I'll be looking at very closely is a trial balance, which will be your basis for producing your own income statement and balance sheet. It's got a bit more to it than you actually need, and but it's the final figures here that you obviously need to take note of. Okay, you can publish it and then print it or export it in a PDF or Excel even. That's it's quite useful. And the other two reports that I want you to generate, one's the profit and loss, which is the other word for income statement. You can see it's got a whole lot of other columns and bits and pieces here, and it's not very well set out. You can do that via the layout options. I'm not going to show you that at the moment, but there's a separate tutorial for you to learn how to do that. You can publish and obviously print, and I'm going to ask you to export those things to me when you submit it. And similarly, the balance sheet, that needs to be again formatted, so you can go to the layout options. We only need one column. You don't need the 2016. Obviously you can't do it because you're only doing it for 1 month effectively, and you can publish and export it that way. Hopefully that's been useful to you throughout the reports. If you need any more help, then go within YouTube or XERO help itself, and you'll find other information that you need to know. Thanks for listening.